The question is, can the street handle it, or could the market actually take off on a rate hike this time around? Joining me to discuss, Shelby, Holliday, and Brian Brenberg. Last December, the Fed hiked rates in December, obviously for the wrong reasons. We started out with the worst start to the stock market in history. Could history repeat itself if the Fed hikes on Wednesday?
Well, investors are saying that a rate hike is all but certain. The question will be how aggressive the Fed will be projecting rate hikes for next year. It's all about the dot plot. What are people thinking long term?
You understand that dot plot thing?
I look at it. I read all about it. I still think what I can't figure out is why certain dots are way.
I don't understand it. I just think that it's a psychological test, and I fail it each time. But
yeah. It tells you what they're thinking about the future.
But essentially, you're saying then, okay,
and the market moves on every word.
A rate hike is built in, and we all know rate hike is coming Wednesday. The key is to give it to us easy about 2017. In other words, kind of suggest one or two.
And there's a balance to strike here because the Fed doesn't want to get ahead of policies in Washington. You know, if Donald Trump's inauguration is the starting point, they don't want to jump the gun and forecast what's going to happen. On the other hand, they don't want to fall behind rising asset prices, economic growth. There's a problem.
And there's a bubbling up the economy right now, Brian. And also Donald Trump gets to start electing governors, and we know we already have a couple of doves coming in that are going to replace a couple of hawks. So we could potentially have a very dovish Federal Reserve when it's all said and done. Would Janet Yellen want to get in at least one rate hike before that?
No, I think she's going to get one in for sure in December. I think next year is going to be relatively slow. There are a lot of uncertainties here. Trump has big plans. There's big hopes. But a lot of it's going to come down to execution. And so I think the Fed's not going to want to get involved there too much. Two rate hikes next year probably sounds good, too, the following
year. Would they telegraph it Wednesday, or would they leave it completely?
No, I think they're going to have an upbeat tone in the economy. We've seen that. It's going to be upbeat. And I think they're not going to say a lot about next year because they don't want to get in the situation they were in last time where they telegraphed a lot of rate hikes and they couldn't do it. They have credibility building to do. That means let's be mum about next year. Let's just get December done, and then let's move into next year and see what happens.
They're also under fire. Donald Trump wants to change the way the Fed works. We're seeing Republicans in Congress say we want to change the rules for the Fed.
More transparency, more accountability.
Transparency, firmer rules, so we know what they're looking at.
But we also heard Mnuchin say that he expects a low interest rate environment over the next couple of years. Remember, we're going to be doing infrastructure building. There's going to be a lot of, I think the government's got to raise a lot of money. I know part of the plan is a private public thing, but a lot of it may have to come through bond sales as well.
That's absolutely true. And then we've also seen Henserling, for example. I mean, the Fed knows it's under a microscope, and there's no way they're going to be.
Let me ask you real quick, because you were going to go to that event on Thursday.
I was.
What were you anticipating? What was the street sort of talking about with respect to Donald Trump and these businesses? Is it even possible to spend everything out this fast to his family or executives?
It's going to be really difficult. We know that he already sold some of his companies related to Saudi Arabia and foreign companies right after the election, but we were supposed to find out a lot more about how he plans to
separate
himself from his businesses.
All right, guys, thank you both very much. Next.